Welcome everyone to another one-to-one mining investment online session. We're going to be hearing all about rare earths today, getting insight on the industry fundamentals and snapshot of how the dominant players, China and the rest of the world, are developing projects in these strategic metals. Taking us through, I'm pleased to be joined by Dr. Luisa Moreno, who is Managing Director and Equities Analyst at Tahuti Global. Luisa has almost 2 decades of experience in finance, business development, and technical research with a focus on key strategic technology minerals and the metals and mining industry as well. With that, I'd like to hand over to Luisa to take us into her presentation. So thank you, Luisa. Over to you.
Thank you, Adam. I'll just start here. I hope you can see the presentation.
Yep, there we are.
There we are. So thank you for inviting me to participate in one-to-one groups podcasts. I will be talking about the rare earth sector and where the rest of the world is relative to China. So as you indicated, I am with Tahuti Global. So this is a company that I founded back in 2014, and the focus of the firm is basically strategic consulting. We work with governments around the world, as well as companies, and we focus on technologies as well as the resource sector and the energy sector. So we have a great deal of focus on strategic materials, including rare earth. So the title of my presentation today is Inching Closer to Rare Earth Independence from China. I started following the rare earth space back in 2010 when prices started going up, and there was an incident between Japan and China that basically led to rumors and suggestions that China was going to use rare earth to persuade Japan politically. And since then, there has been a far more sort of focus on rare earth and developing rare earth, not just production, mining production, but also the supply chain. So I will be reviewing the sector, talk a little bit about the supply chain, and then discuss some of the issues that the West and the rest of the world is facing as far as developing that supply chain. And then I will basically review some of the more developed projects and discuss, those that perhaps have a better chance. So this first slide essentially tries to show that we are indeed, or the West and the rest of the world is indeed inching closer to independence. And now, if you look at on the right, in 2009, China essentially controlled more than 95% of the production in terms of beneficiation and cracking, the initial processing, as well as the separation and smelting and refining. By smelting and refining here, what I really mean is really the production of metals and alloys. And as many of you would be aware, that is important for the magnets. And so fast forward 10 years later, in 2019, this is the data. The production is from USGS. It's an approximate number, and we see now China with, still the largest producer, but significantly less compared to 10 years ago. However, China is still controlling the processing aspects of it, with 79% in the beneficiation and cracking, and more than 80% in the separation. And by separation here, we're really talking about the production of oxides, compounds to be more precise. And that today is done essentially using solvent extraction, separation. And so finally, the smelting and refining, there's been some progress, but again, China still controls most of that. So this slide essentially shows where most of the mining is done. Again, as explained in the previous slide, China controls 65%. So right now, world production is around 210, 230,000 tons a year. So China has more than 130,000 of that. And so Australia, actually United States came second in 2019 with roughly 26,000 tons according to USGS, followed by Australia and Myanmar or Burma with about 22,000 tons per year. The other countries, Russia, India, Burundi, I didn't include Madagascar and others, they have lower production, anywhere between 1,000 to 2,000 tons. But what is interesting here in this particular slide is to see that, as we know, what's produced in Australia goes to Malaysia, but part of what is processed in Malaysia actually still goes to China, is the so-called SEG stream. SEG stands for Samarian European Gadolinium stream with the rest of the heavies that is actually being sent to China, where it is processed and separated. Most of what is produced in Myanmar or Burma, as some may know it, is going to China. The ionization clays are processed and then sent to China, and some of the higher grade ore deposits are basically just beneficiated, upgraded to about 30% concentrate, and then that is sent to China as well. The West has not been able to have much of a presence in Myanmar, despite the fact there's good deposits there, in part because there's been sanctions, there's been conflicts in that part of the world, and which has restricted Western companies to be in that part of the world. So China has had a very strong presence and benefited. So there's Chinese companies that actually own those deposits. So in the United States, we know Mountain Pass, it's currently in production, the mine part of it. The ore most of it is being sent to China for processing. So in 2019, as I said, currently about 26,000 tons of contained rare earth was sent. And my understanding is that what's being sent is the ore concentrate. It's basically the bastnasite. Russia is a producer as well. Part of it's processed in country, but a significant amount is also sent to Estonia for further processing. It's not a lot, anywhere from 2,000 to 3,000 tons. What's produced in India is separated in India, is mostly going to Japan. And then all the other countries in Africa and other parts of the world, they start with very low production, and then usually it's separated in China. So this basically proves the previous slide, if I go back, which shows, yes, there is more production coming out of other countries outside China, but China still dominates the processing. And that has to change. So we did a survey in 2017, actually, where we asked industry participants and end users whether it was important to them having that supply chain outside. So one of the questions we ask end users of rare earths is how important it is for you to have a Western supply chain for security of raw materials. And across the board, everybody says anywhere from important to very important. And so we wanted to understand whether that was related to costs, and it wasn't. Only about 1/3 said yes. The transportation costs, when we asked them, is transport costs of raw materials a large component of your overall purchasing price? Only about 1/3 said it is. But it seems that you know, the need or the interest to have a more diversified, I would say, or out of China sources is probably more for the security of the raw material than cost related. The other question we asked them was that it had been suggested that the only way rare earth companies outside Asia will be able to compete is if a newer, more economic RE extraction process and separation technology is developed. And most of them had agreed that they seem to think that that's important. And in more detailed discussions, obviously the survey does not reflect that, is that I think there is a recognition that some of the deposits outside China are probably less competitive or are more complex to process. And so another question, this is just the last one. I mean, we asked many other questions, but we thought this would be interesting, is how important is for your company to purchase raw materials processed with clean technology? And across the board, they all say, obviously, it's important. I don't think anybody would say otherwise. And so for companies that are in Africa or South America, where standards, environmental standards are perhaps not as enforced, and those that are, for instance, purchasing, not purchasing, that's not the word I wanted to use, those that are looking to develop, say, for instance, deposits with potential large impact, environmental impact, like the ionized ocean clays, they would have to have that in mind, because it seems that end users and other participants in the sector take it very seriously how rare earth companies will develop their processing and their companies, and so doing it properly, even if it's more expensive, is going to be important. So what I want to do with this slide is really just go over some of the most important aspects that companies outside China will have to have in mind, and where we stand, essentially. So it's important to diversify production. And so, there are a number of projects, and we will discuss that in the next slide, in South America and Africa, North America, Canada, both in the US as well in Australia. And the important point here, which I would like to bring, is that the best projects are those that have known minerals. And by known minerals here, this was just a short way of presenting it, I mean minerals that have been processed economically in the past successfully. We have found out in the last 10 years that companies are trying to develop processes with, and they have deposits with new or a cocktail, as I like to call it, of different minerals, find it very difficult to advance, and they end up with this very, very large capex, and I will give examples. So usually when investors are looking at projects, it's important to, when you look at the resource and the mineralogy section to see, okay, what are the minerals? What are the main minerals in these deposits? And just for reference, I didn't actually write it here, the minerals that have been successfully and economically processed for the recovery of rare earth has been traditionally the bastnasite, which is a light rare earth mineral, as well as monazite. They're both light minerals, and by light minerals I mean they have most of the elements are light elements, and they usually, bastnasite might have about 7%. Sorry, monazite might have about 7% heavies. Bastnasite would have less than that. And the other minerals also successfully processed has been xenotime, and I would say, of course, the ion adsorption clays. And so my experience looking at, again, these various projects and how they advance, it seems that those that have those minerals have been the most successful. Of course, they all have their issues, and we will discuss it in more detail. The other point I put in here is that in the beginning, we saw China still controls about 65% of the mine production. But because of what we're going to be discussing later, which basically means in terms of economics, it is still important to continue to develop projects and mines in outside China, because if we are going to develop a supply chain, it would be good to be able to source the ore or the compounds outside China. So once that mine side of development is settled, and I think we have made good progress, the next stage is beneficiation and cracking. So I'll explain that in a little bit more detail. So beneficiation really, in this case, is that, in the case, for instance, of Mountain Pass, they produce a mineral concentrate, which is about 30% rare earth. It's a bastnasite. It might even have some monazite as well, concentrate, mineral concentrate. And in order for it to be exportable economically, it has to have, around that, at least more than 25% rare earth concentrate, grade. And so that is an issue, because if we think about Mountain Pass, it has an average grade of about 8%. And most of the projects, and as I said, I will discuss some of them, have grades below 2%. So to go from 2 to 20%, you have to upgrade, quite a lot, and then to 30%, even more. So unless the grades are high, like is the case Rainbow Rare Earth with the Burundi project, which is a high-grade bastnasite deposit, it is very difficult to export the ore to areas where it could be processed more economically. So that is a consideration. So the main point here is that projects in more remote locations with complex minerals may not be economic even at this stage. Even before you try to separate it and try to make a metal out of it, just at this stage, you can look at a project and ask a number of questions and determine whether it's possible to be economic or competitive. So once a project is able to produce mineral concentrate, and some of them, I won't say many, but some of them are just not able. They have grades of 1.2 or 1.3, and they might be able to produce, say, a concentrate of 3 or 4, 5%. And that's it. And then after that, they have to leach all of that low grade ore. And now there's many other issues. Obviously, CapEx and OpEx considerations when you have to leach all those volumes of material. But that is the reality that we're dealing with right now. And so, but companies are doing it, and And there's a number of them that have been able to produce, of cracking the material and produce a mineral concentrate, a mixed chemical concentrate above 98% concentration of total rare earth. So once you have that material, you can move to the next stage, which is the separation. And as I mentioned earlier, that process is done using right now solvent extraction. In a different presentation some other time, I can discuss the various other technologies that are being developed to tackle separation potentially more economically. As you saw, end users or industry participants believe that developing separation technologies could be the key for competitiveness for companies outside China. And that is, it's work in progress. But right now, the option that works is really, solvent extraction. And so the points that have to be taken into consideration here is that access to reagents, obviously infrastructure, are key to economics, and the availability of experts is essential. And so folks say, solvent extraction, it's known, it's been used for a long time. In Canada, we use it for uranium. It's used for so many strategic materials that are processed or have been processed around the world. But, there are specific reagents that need to be used. And so for the separation of rare earth, and there's certain expertise that's required. And so that has to be sourced and has to be worked on. And it should be taken seriously. So companies, again, outside China, should invest more in developing understanding the existing technologies for separation, as well as, developing others. So one point that I would like to make is that even though, for instance, companies like Linus in Malaysia, they separate and they produce neodymium, praseodymium, lanthanum, cerium, and so forth. And, even Molycorp, when they were mining in Mountain Pass, they were also able to produce many of the lights. The SEG stream, which is basically the heavies, are still, as far as Linus is concerned, are still exported to China for the processing. And other countries are doing the same. And that is in part, I believe, with economies of scale, because the amounts are so small. And there are SEG plants in China basically collect from different locations, and they obviously have the expertise. And so that has to be taken into consideration. And we have to find ways to essentially tackle that so that we're able to keep the heavies as well and be able to separate it. So finally is the smelting and refining. So once we're able to economically produce, beneficiate, crack, and separate, and then we can start thinking seriously as well. I don't want to sound as though we do one by one. No, everything has to be done simultaneously to obviously start thinking about how we're going to economically smelt and refine. And there are obviously expertise, reagents, power costs, all these considerations are important. And once the separation is done, it is usually economic to export. Obviously, that's, it's happening in China. They export oxides and compounds of rare earth across the world. So the locations for smelting and refining is less critical, less important, or less related to the origin of the mining. But all of that has to be developed, and these are some of the points. So I'll be moving quickly in my last, I believe, 2-3 minutes that I have here. Just show some of the projects. This is a table which is not really updated per se, but I just wanted to show the capex I mentioned earlier, that some of these projects have very, very high capex and opex. And so this is the prices that you see, which is the second last line, which is undiscounted basket price, that is for 2017 prices. But what I want to bring to your attention is that, for instance, the last two columns, or I should say lines, last two lines, which I highlighted, which shows the OPEX and the price of many of these projects. And you'll see that some of them are underwater. In fact, if you look at the last few projects on the right, the Strange Lake and the Kipua, for instance, those projects have been discontinued. Strange Lake, as the name suggests, if you look at the dominant RE minerals, which is the third line, it has a cocktail of minerals that was very difficult to break down. And then the total capex line, you know, it really, I'm not sure if you can see the mouse, but it was very high, about $1.6 billion to develop the project. And in 2017, the basket price, undiscounted basket price, and that is assuming that every single element would be recovered, would have been only about $24 per kilo, when the projected OPEX was much higher. So, you know, so this table shows, again, just the variety of the different minerals. And the only project that's still, from this list, that's still advancing, that does not have the common minerals, the monazite, the bastnasite, and xenotime, is the Foxtrot search minerals. They have made significant advances. So just wanted to bring that to your attention, but we will move on to my last slide here. And I just wanted to bring a more sort of updated table of some of the advanced projects. This is by far not all the projects that are out there. Some of them, especially those from Australia, are known. I haven't come across any new really projects out of Australia that, you know, advanced enough that should be making this table. But so I've listed the various the first column is just the name of the various projects, and I'm just going to go over some of them. I realize that I'm probably running out of time here, but this Angola project, the Logonjo, is at the pre-feasibility stage. Is the first project. It's a monazite. The main mineral is monazite, so the process shouldn't be too complex because it's a non-mineral. There's enough information in the literature, but they would have to deal with the thorium and uranium situation. You know, I didn't actually check where the concentrations are, but they seem to have good infrastructure, rail, ports, and all of these different things. And the grade, if they were to do some local sort of, a little bit like Rainbow, localized mining, maybe they would end up with a much higher grade, but because they have some pockets of very high grade in the 5% and so forth. But the resource brought the grade, the resource estimation had brought the grade down to about 2%, to something, I believe, 2.6%. So upgrading this monazite, it would be, and then exporting it outside Angola, I foresee that would be a problem, especially because it's monazite and it would have, you know, thorium as well, relatively high, because the thorium wells are going to be upgraded. So they are probably looking at developing the whole project in Angola, which is not impossible. I mean, it's an oil producer. I'm not sure if it's oil refiner per se, but you know, now you have a project in Africa and you have to think about all the other points that I've discussed about developing it. But it's moving well, and it has good chance. I want to talk quickly about Northern Minerals. They indicate they are in pilot plant production. Right now, they're producing very low amounts. Their target is 500 tons. So this is a Xenotime project. It's a very good project. It's in the news. The Chinese want to invest, and I think they were blocked. I think it was Northern Minerals from that investment. Is under review. And so the Xenotime project has very high grades of dysprosium, but Xenotime tends to be rare, the deposit is small. So they're still drilling and looking at other areas. And the reality here, as far as Northern Minerals is concerned, and their continue drilling, is that, if the deposits that they're drilling is different from the current one, they may have to end up with a different process. But apart from that, it is really the only other production of heavies that I know of outside China. And it's very small, as I said. They're targeting 500 tons. They're probably at around 20 or 30 tons right now. So it's not a lot, but if we think about the market for heavies, is not that high as well. So, but this is a company that I've always liked, but the realities of the size of the deposit and valuations are real. So the other projects in Australia are well known as well. They are advancing. Alkane has a high market cap, but they also have gold project. And you can see the process and environmental risk columns, they sort of correlate a little bit. Then those that have monazite, usually, I basically flag it as a little bit high environmental risk because of the thorium uranium. And that is particularly important for, areas that are not so, I would say, developing countries, and countries or areas like in Quebec, that the regulations around Quebec, Canada, I should say, regulations around dealing with thorium and uranium are fairly strict. So I would like to emphasize in this table, as I'm running out of time, the Araxá project. CBMM is the largest producer of niobium. They have invested over 50 million in their project. They are piloting, and they have monazite pyrochlore. They are producing small amounts, so they could, continue if they find it economic. I know they want to go all the way to the metal itself. So we might be seeing the development of supply chain out of Brazil. Unfortunately, the company is not listed; it's privately held. So it's difficult to participate. Another company in Brazil is Cerro Verde. It's actually funded by Denim Capital, which is a large fund, and so they've been very well funded. So we might see more advancements out of Brazil and potentially more production. From this list, I wanted to bring to attention the Penco project out of Chile that Hochschild Mining, which is a gold company, have basically acquired. They used to be called Biolondonitos, and they have iron adsorption clay. It's easy to leach, but the waste treatment has to be taken into consideration. But that's a project that hopefully Hochschild continues to update us, and we might see some developments out of Chile. As far as all these projects, so there is another iron adsorption clay deposit. This is in Uganda. It's been basically run now by Ionic Rare Earth in a joint venture with Ouro Verde. And it's interesting, it's a light rare earth deposit. Again, the considerations will be the cost of processing in an environmentally safe way. But for those that think iron adsorption clays are important, those two companies, at least one company is probably the only one listed right now, with iron adsorption clays. Of all these projects, as I don't have time to go over all of them, the one that is really interesting to me one of the most interesting, they're all interesting, is the Peak Resources one. The Nuguala is in financing stage. It's a bastnasite deposit. The grade is not bad, around 2%. But the issue I have is in Tanzania, and the policies in Tanzania have changed. I thought about presenting. I knew I was going to run out of time, but just give a sense of policies around the world and just compare. But my point here is that unfortunately Tanzania has very strict and not very favorable policies. They require 16% free carried interest. And for mining companies, especially in the rare space, that will take a chunk of their valuation. But, essentially this is the landscape at the moment. A lot of the projects have the common minerals and they have great potential. Those that are in developing countries might have a little bit more of an issue, but they're all advancing and many of them are interested to go all the way to the oxides as well. And so we should continue seeing an increase in production. I don't, not within the next 5 years, I don't think. But after that, this is going to take time. And I would say to investors, probably in the next 5 to 10 years, we will see more of a supply chain potentially out of China. So I will leave it as that. I hope I was able to review and highlight some of the issues. And I'm happy to take any questions from now. I mean, I think I have way past my time, so I leave it as that. So I'll get back to Adam.
Thanks, Luisa. That's really, really great and very comprehensive. Love that slide on the reviewing the projects there and looking at the various feasibilities of them. We do have a bit of time, but yeah, that's within the half hour rescheduled. But let's roll on with a couple of questions. Sure. I just wanted to ask, sort of relay this to a little bit of what's happening now in global economic markets, macroeconomic picture. If you look at something like low oil prices, for instance, how's that helping on the sort of on the producer capex side, keeping power costs low for some of these projects? Is that going to be a boost to some of these projects where you say the margins are really, really quite fine, and the mining project is out in slightly remote locations where they need these diesel generators, etc.?
Yes, I mean, I think projects that are remote are more likely to probably use diesel to power some of their operations, although that tends to be expensive. And so if prices of oil stay low, it should help with the operating costs estimates for some of these projects. But that's just one of aspects of developing it. Obviously, power costs are important, and being close to the grid, have access to low power is a better option in this case. Mm-hmm. I would say. But these are mining companies, and so they do use steel, and some of them, I mean, I don't think none of them are actually underground. They're not going to be used timber or something like that. But for the construction of plants and all the materials that goes into that. So as far as when commodity prices are lower across the board, should help with the development of the project.
Okay, good to know. The other element I was going to think of was what's going on with automotive at the moment. If we take a long-term view, harder to say, of course, but do you think with the lack of sales on automotive, both whether it's EVs or ICE vehicles, that's impacting the outlook or the sort of the story to investors for rare earths, or do you see these far more as longer term plays that actually the market conditions are going to be quite different by the time these projects come into fruition?
Well, I definitely think this is more of a long-term plays. I mean, obviously, looking at the current situation with COVID-19 and how it's affecting the economy, whether it will affect in a negative way, whether it's going to affect the green technology revolution that, if we can call it that, that is continuing as far as increasing sales of electric vehicles and adoption of green technologies like solar and so forth. If oil stays really low, and I think it started to go up, but if it stays ridiculously low levels, I think it could affect sales of electric vehicles if it sticks for a long period of time. And that could have an effect not just on rare earths but other strategic materials and the whole interest of developing them. But I don't think that's going to be the case. I think this is, I guess I'm hoping that COVID-19 will pass, so we will learn to live with it, and the economy, the economic situation will go back to, whatever normal is, and we will go through cycles, economic cycles, and commodity cycles. But I think there is a determination at government levels, including China and outside China, to continue to invest in renewable technologies, including, of course, electric vehicles. And so many countries, as you know, have targets for sales. Sorry, you were saying?
Yeah, I was going to jump in and say, well, with that, do you think governments are spending enough or supporting enough, putting enough into rare earth projects? Some are obviously more than others, and obviously there's the strategic need has been realized now. We've seen with new policy through the US and Australia's efforts, but are governments putting in enough capital into these projects outside of China?
We haven't. There's a lot of discussion. I think there's interest. So I was very curious, for instance, to see that Australia is interested in investing some of the projects outside Australia, and I'm not surprised to see the US doing that, just because they have less prospective projects, say. But really surprised to see, Australia saying, okay, we might be interested in investing, for instance, in Peak Resources, the development of that project, and they're part of the world. And I've read some material where they say, these are the Australian projects in Australia, and these are the Australian projects outside Australia. So, and I think we're starting to see that interest, and there's a lot of talk for sure. But I'm not sure that there's actually been any significant amount of money that has been disbursed as of yet. But definitely there seems to be signaling of that intent from Australia, United States, and obviously we know China has been doing that for a long time.
Of course. Yeah, interesting. Maybe with the recent huge fiscal spend packages, rare earths industry and junior miners can stick their hands up and say, hey, we're part of this too.
Yeah, that would be nice. I mean, I think a lot of it has been allocated, unfortunately, and I'm not sure how much of it has gone to the rares. I mean, again, it's really a power of lobbying, and when the money is going outside the US, outside the countries, there's less interest in doing that. But yeah, so I'm not sure that there's a lot of stimulus money going there. But I mean, at least towards research for the processing. That would be nice to see some of that money going towards that. Because as I said, to develop the supply chain, you have to tackle every aspect of it.
Okay.